The reset isn't relief, it's a bill. India didn't just negotiate tariffs, it negotiated the price of sovereignty. Trump and Modi are calling this a grand reset. Tariffs drop from a suffocating 50% to 18%. Markets rally and the optics scream victory. But transactional audits aren't about optics. They're about leverage. Let's open the ledger. First, the $500 billion tab. India's entire 2026 federal budget sits near $640 billion. That means this purchase commitment equals roughly 80 to 85% of one full year of national spending. Multi-year or not, that scale pre-allocates capital toward American industry instead of domestic infrastructure. This isn't just trade. It risks becoming strategic ransom, miss the targets, and Washington can snap tariffs back overnight. Short-term gain, export oxygen. Long-term risk, fiscal autonomy quietly hollowed out. Now the energy divorce. For years, discounted Russian crude saved India billions and helped contain inflation. Those discounts once ran $8 to $10 per barrel. Shift to U.S. and Venezuelan supply, and refiners lose that cushion while processing crude they aren't optimized for. Margins compress. Diesel economics shift. Consumers eventually pay. Translation: geopolitical alignment becomes imported inflation. Next, the Zero-Tariff Trap. Agriculture and dairy employ over 40% of India's workforce. Opening the gates to heavily subsidized American farm exports could trigger price collapses across rural markets. Food security stops being purely sovereign the moment protection disappears. Then comes the reciprocal illusion. Yes, 18% is better than 50%. But rivals like Vietnam and Bangladesh effectively operate closer to 15% with trade preferences. India may have traded strategic autonomy for a rate that still leaves it structurally less competitive. And now the internal shamble. Modi calls it a wonderful announcement. The opposition calls it a great capitulation. Behind closed doors, the real question is BRICS. If accountability clauses force India to scale back, Russian trade or align purchases with Washington, New Delhi drifts from multi-alignment toward quiet dependency. That's not strategy. That's gravitational pull. Transactional verdict. Short term, markets surge, the rupee stabilizes, exports survive. Long term, fiscal flexibility shrinks, energy costs rise, rural sectors face shock exposure, and foreign policy maneuvering room narrows. The reset may have saved India from an immediate tariff chokehold, but it may also mark the moment economic sovereignty started moving onto a payment plan. Comment below your thoughts and follow the Global Analyst for more geopolitics updates.